Short-term care. It's money that you're leaving on the table. And something that, I really want to get into is it's not only money that you're leaving on the table today, but it's a huge market that you're leaving your clients exposed to risk. And a lot of agents, a lot of clients, both alike, don't know about this product. So I know that the biggest incentive for an agent to learn is usually money. So that's why I wanted to point out that it's something you're leaving on the table. But today we're going to talk about why short-term care, what's out there for short-term care. In particular, with Kanawha, I want to talk about the products that you guys already have contracts with. At least Kanawha does, whether the individual agents do not. It's just a matter of talking to Mickey and getting everything set up. I can definitely help out with that. But for right now, let's go through kind of what's going on with short-term care and what's out there for you guys. Let's see here. All right. First things first, I was trained initially to always go towards long-term care. Nowadays, the hybrid market is another alternative. So long-term care, hybrids, I always want to go with something that's going to have more coverage, but that's not always possible these days. It seems like the last 3 years, there's been a huge influx of individuals wanting to look into long-term care. Everyone knows that kind of died off for years, whether it's because the clients didn't have an interest or the agents got burned out. It's just the way it was for a lot of years. Short-term or long-term care fell out of the popularity. It's been coming back. But with it coming back is a lot of clients that they're coming back for a reason. There's something wrong with them. They want to get the insurance. So there's a lot of declines out there. And even if they are coming back, usually they're coming back at the age that their parents got long-term care, 60s, 70s, 80s. And 20 or 30 years ago, that still was pretty well priced. It's not the case today. If you're coming back 60, 70, 80, if you can even be considered, it's usually a premium that the client doesn't have in their checkbook. So those are a couple things right there. The underwriting and the pricing are keeping a lot of people out of long-term care. So short-term care has become something that has grown, and I know a lot of times agents will say short-term care is not enough. Well, Genworth, which they've had their own drama the last couple of weeks, but Genworth is the biggest and oldest name in long-term care, and all their studies are showing after the last 30-some years that most of the care that's provided in a facility, I think it's 48 or 49% of care actually provided in a facility is for a year or less. So that's not all, that's not half, that's not the majority, but a good chunk of care that's actually provided in a facility is for a year or less. So if somebody says, I want long-term care, I know we want to get you long-term care, but for whatever reason we can't, don't say that short-term care isn't the best option. It's an option for a client that had nothing else, and it might be the exact right amount that they need. Along with that, premiums with short-term care. Everyone knows that long-term care had rate increases. And I know back in the day there was carriers like Genworth that they said we would never have rate increases. Well, time's showing them wrong. Short-term care is expected to be a lot more stable. I have faith that it's going to be a lot more stable for a couple of different reasons. If no other reason, then they're on the line for a lot less than long-term carriers are. So you're going to have more stability there. It's easy for actuaries to gauge what they're going to be on the line for in the future. So we got more stability there. And then the last 2 points here are something that some agents don't realize the difference. Long-term care these days, they have 90-day certifications of care, and they generally have an elimination period. They're not the same thing. That certification of care that is built into long-term care these days, it means that a doctor has to say, you're going to need care for at least 90 days. And if the doctor says you're going to need care for 89 days, your elimination period for your long-term care isn't going to start ticking. If you have a 0-day elimination period for your long-term care, if the doctor says you need care for 89 days, it doesn't matter. Your long-term care is not going to kick in. Those are all things that long-term care is facing, which, again, I'd rather have long-term care, but those are all things that long-term care is facing that short-term care is not. Now, things that make short-term care stand out. Premiums, they're more affordable. Again, the actuaries, they can price them lower because they know what they're risking. They can actually quantify what they're risking compared to long-term care. They don't have gender-based pricing. About 5 years ago or so, long-term care started going to gender-based pricing. Women cost more. So we don't have that problem with short-term care. No gender-based pricing. They don't care about prior declines. I've had clients that have come to me before that have been declined multiple times for different long-term carriers or with hybrid products. That's not a concern with short-term care. Another thing that is a highlight for short-term care is it's very flexible. Whether you want a small policy to fit into an elimination period of long-term care, or you have a client that can't get long-term care and wants as much as they want, you can build a 30-day policy, you can build a 2-year policy. You can stack different policies on top of each other. It's ridiculously flexible, so don't only think of it as a solution for somebody who can't get long-term care or can't get a hybrid product, but it's also a solution for somebody that maybe already has and you want to fill that elimination period they have. They're very flexible. There's a lot of different markets you can work short-term care into. Something that's kind of a highlight, kind of a downfall for short-term care is the products can vary by state. Many products out there are very similar from state to state, the only big variation generally being rates, but they can vary. So if you are working nationwide, do be aware of that. Don't just assume that your app is going to work in South Carolina as well as it's going to in Ohio. That's what I'm here for. I can definitely help you get the right material and go over that. And with the variations from state to state, the underwriting for specific products are going to be the same. If one product has 2 questions in one state and another product has 11 questions, they keep the underwriting similar from one state to the next. But the nice thing about short-term care is it is simplified underwriting. It is reduced premium. You're generally looking back 2 to 3 years, depending on the product. You can have anywhere from 2 to 11 questions, depending on the product. So it's not like long-term care where you're looking back 5+ years. You got multiple pages of applications. Not all these carriers are doing, phone interviews. So it's definitely simplified underwriting. And along with that simplified underwriting, it's a great turnaround time. I know some policies, I've seen some policies get issued in less than a week. Average, though, is 2 weeks. And usually that's just an administrative situation. These policies, they do very well at getting the information quickly and turning around quickly, so usually it's just a matter of entering that client's data. As far as the build is concerned, there's a lot more flexibility. I know we've had a lot of individuals that have been looking at short-term care that are too short for their height or too short for their build. Diabetics especially, this has opened a lot of doors for them to finally get the coverage. Biggest thing out there for short-term care is that it doesn't interact with any other type of coverage. It doesn't interact with Medicare supplement. It doesn't interact with long-term care. They don't interact with each other. So if you ever look at the benefits of short-term care and you say, Medicare will cover this, maybe it will. The problem is you got to qualify for Medicare. So if you don't qualify, you're left out in the open. And the client goes, well, mom and dad got covered for Medicare for home care. This will be fine. Maybe, hopefully. Let's just assume everything goes well, and yes, Medicare covers your home care. This is going to pay on top of that. These benefits pay on top of anything else. So keep that in mind, even if you do have a savvy client that says, mom got this covered by the insurance or by the state, they're getting tougher on that. This is a way to ensure you don't have to worry about qualifying for Medicare. You just have to qualify for these products. You just have to have these products get triggered. And the way these products are triggered, generally, 2 activities of daily living or cognitive impairment. If you know long-term care, you already know that. So most of these products, that's how they're triggered. I wanted to get before we got into the bones of the products, I wanted to give some examples of some situations that can be covered. So be thinking about clients you have on the books that you've never been able to sit down and have this conversation with because of their health or because of money. I gotta give a little warning. These actors that are pictured to the right, these are not their actual health conditions. I actually use some of their stage names because these actors are actually this age. Denzel Washington is actually 65 years old. I want you to think about that because 65, 70, 75 years old does not look like it did 20 to 30 years ago. It can look perfectly healthy, and you can have these kind of conditions. So it's worth asking every client, what do they have for a care plan? If they say nothing because I have arthritis or I had a stroke, you could have an option for them. So a 65-year-old guy, arthritis, tramadol, stroke 4 years ago, that's absolutely something we can look at for short-term care. The company A, I didn't list the actual company on there because, like I said, the rates can vary by state, but these are South Carolina rates that are in. Company A would be Aetna, Continental Life. That would be their recovery care product. That's my first go-to product when it comes to short-term care because it's the best comprehensive. It's the best at-home and facility care product we have. And you can see right there, $100 a month, get some coverage that you wouldn't have otherwise with long-term care. Below that, Company B is Guaranteed Trust Life's short-term home health care. That's the best-selling product we have because there are so many sick people out there or people that just don't have the cash. As you can see, it's more affordable. You don't get as much benefit out of that product. It is a limited medical home care. We'll go into more of that later. But I wanted you to see our first option, my first option, is going to be $95 a month. My last option, not saying in a negative way, but just my last option because of the product limitation, is going to be Guaranteed Trust Life, their home care, for $47 a month. There you go. That's what a 70-year-old can look like these days. That's what a 70-year-old that got declined because she's diabetic with blood pressure and sleep apnea. You can go and find that 70-year-old and you can get them coverage for under $150 a month. Or if they're strapped for money, $47 a month. But I want you to think about that. Think of these medical conditions when you're thinking about your book of business. Who out there has some issues? Here's what a 75-year-old looks like these days. Here's what a 75-year-old looks like who's, well, that one doesn't look like it, but who's overweight, who uses tobacco, using less than 50 units of insulin a day. That can still be considered by Aetna's comprehensive product. By GTL's home care on the bottom, that can be considered even if he's over 50 units. And it's still something that's not going to break a bank, just over $200 a month. So definitely be looking at all those people that you have declined or you never had the conversation with because of money or because of underwriting. A lot of agents are going to wonder, what's the average for short-term care? This is the average. This is what we look at on average. Generally, short-term care are people that you're finally talking to them. They hit 64, 65. You finally got in front of them. But when they get 64, 65, the doctors finally started prescribing them stuff. They finally found out that person's a mess. All of a sudden, they want to get long-term care. They can't. That's when we have a huge influx of short-term care clients, all the way up to, I'd say, 74 is a pretty good number. Past that, a lot of times, if the client have that compromised health that makes them want to be looking into short-term care, by the time they're hitting 75, whatever's wrong with them is taking their toll. A lot of those clients are needing more comprehensive care, or they're needing care, period. And so they're going to be knocked out of these products. So that's why that's the average age range. That's not the solid age range, but just some averages. Most people that are getting this policy or getting short-term care, they're getting as long as possible. That makes me think that they know there's something wrong. They can't get long-term care, so they're getting as much as possible. Some plans only offer 1 year coverage. Some plans can offer 2. It doesn't matter what the product is. Generally, when or buying it, they're buying it for as long as they can. Not necessarily as much as they can. As you can see below, the dollar amount does vary. The dollar amount varies because most of these people are trying to find something that's about $100 a month. Average premium per year, $1,100, so that's $91 a month. That's the average premium. So people are getting it for as long as they can. They're getting it for something, or they try to keep it under that $100 mark because people like it when you can get something for $99.99. So they try to keep it under $100 per month in premium. And what that $100 gets them, you know, it can vary, or it can cause the daily benefit to vary. As far as who Premier works with for short-term care, as many people as we can, because all these companies have their own little niche. They all have their highlights. As I mentioned earlier, Aetna, Continental Life, their recovery care product is the best-selling comprehensive product that we have, best-selling plan that we have that can offer facility and at-home care. Next, after that, the best-selling product is Guarantee Trust Life and their short-term home health care product. The other plans are out there. If you ever, and there are some more than this, but these are the plans that we work with for whatever reason. They all have their strong points. If you ever come up with somebody asking about a field issue non-medical service plan, we can help you with True Freedom. Or if we ever have somebody that says, hey, I'm competing with Kemper and their home health care plan, you know, we can help you with that. UCT, Standard Life, these are all guys that have their own niche. So if you ever run up against them, or if you ever find a client that we can't get with Aetna or GTL, let me know why you think we can't get that. We might be able to get them coverage with one of these other plans. Like I mentioned at the beginning, I want to go over products that I know the agency already has contracts with, and I'm actually really happy with what the agency already has contracts with. With that being said, Aetna, Continental Life, they've got 4 products. 2 of them they're slowly phasing out with their new ones. One of their new ones being their home care only product. This is a plan that we don't work with as much. We work with it when the underwriting wants us to look this way, because it does have great underwriting. You can see in one of those bullets there's no bill chart, cognitive interviews, medical records, phone interviews. There's 4 questions to this product. This product is definitely one that you can get issued in 2 weeks. That's not an issue at all. The only thing is it's home care only. And it's indemnity, so somebody can sign up and get 52 weeks of care, $1,200 a week. The only stipulation to get benefits from this product are that you have the doctor sign off the care is certified medically necessary. This is one of the few products in all of short-term care that to trigger it, you just need certified medically necessary care. So that's one stipulation to trigger the policy. The other is you'll need care at least 3 days a week, and then you can get your $1,200 if that's what you sign up for. So if the doctor, a great example, if you've got somebody that's blind on oxygen, they can get signed up with this plan. Other plans that need ADLs to activate, well, that client can do all their ADLs. They're blind and they need help hooking up their oxygen. The doctor can sign off saying care is medically necessary. They need somebody to come in Monday, Wednesday, and Friday and switch out their oxygen. You can get $1,200 a week if that's what you sign up for, just for somebody to come in 3 days a week. So because of that, the underwriting, this is a very good product. Not something we work with as much, and here's the reason why. Aetna's other product, the recovery care product, it's a product that can offer 2 years of coverage. At the base of this plan, it's a hospital indemnity, so you got to buy this bare minimum hospital indemnity. It's like $10 for 90 days. You've got to buy the bare minimum of that, and you also have to buy a bare minimum of the facility product. That being said, if you would just want a home care plan, you can go out and get Aetna's recovery care, add on the home care rider for as long as the home care plus. The home care rider and the home care plus they can equal the same amount. So you could get home care rider with recovery care for $1,200 a week for 1 year. And in many states, getting this home care rider, even with a couple extras that you have to buy with this, in many states, you're going to have a premium that is less than if you were to do the same thing with Home Care Plus. Not always, but many of the times. That's why I say that Home Care Plus, we look at that a lot of times. If there's an underwriting issue, this recovery care is very versatile. So if a client says, I don't want any facility care, I just want home care, usually I'm still going to be looking at this product because we're going to get better premiums. So that's something to keep in mind. This product, it can consider insulin-dependent diabetics as well. No complications as long as they're under 50 units a day. So if you have somebody that's on 51 units, I'm going to send you back over to the Home Care Plus. As far as underwriting, it's going to be looking back 2 or 3 years. But on the positive side, no bill chart, cognitive interview, medical records, phone interview. Things, they do have a declinable medication list. Both Aetna's products, that's how they underwrite the application questions and a declinable medication list. That's it. So if you've got that application in front of you and the medication list, you've got a really good chance of getting this product. It's just a matter of them not lying to you and forgetting that, you know, they're on 80 units of insulin a day, because when they do that med check, they're going to find that. Nice thing about both Aetna's products, they go up to age 89. It's rare that we see that, but we can do it. Those are the 2 Aetna products. You guys have also got the GTL contract. I want to mention this Recover Cash just because you've got the contract. If anyone ever says, what about GTL? Or if they say, I want more than what Aetna can cover, you know, Aetna can do 2 years when you have that home care on there. If they still want more coverage, we can do that. We can stack a Recover Cash on top. Underwriting, frankly, it's a little bit tougher. But you can get the best premiums out of any product out there. So if you have a client that can't get long-term care, really good shape, but they're stretched for money, we can probably get a premium that they can afford with this product. Here's the best-selling product that we have for all long-term, short-term, or hybrids. It's a home care-only product. It's a limited benefit home care product, but it has 2 or 3 health questions. The 2 questions you need to worry about: can your client perform their activities of daily living? Do they have cognitive impairment? That's the one question.
Turned it off.
The other question is, are you receiving care at the time of the application? Not are you receiving care tomorrow or yesterday. Are you receiving care at the time of the application? If both those questions are good, you've got somebody that you can write right now. I've had people getting treated for chemotherapy that have gotten signed up for this. There is a 6-month pre-existing condition stipulation on the home care benefits. However, there is not on that prescription drug benefit. So that guy that got signed up that was getting treated with chemotherapy, you could get the drug reimbursement first day. That's got no pre-existing condition clause. He started receiving or started cashing in his receipts for the prescription drug benefits. That took about a month before he exhausted that for the policy year. And then he waited a couple more months, and he started getting a chemotherapy specialist coming into his home, and I think a nurse as well. So go find those clients that are uninsurable anywhere else. Can they do their ADLs? Do they have cognitive impairment? Are they receiving care at the time of the app? That's what's standing in the way of you and writing some business and someone that's uninsurable anywhere else. Another way to look at this, if you have any clients that want a dental vision plan, or that want a critical accident plan, or a hospitalization, hospital indemnity plan. Those are riders that you can add on here, and they have the same underwriting. So I've got a lot of agents who are writing hospital indemnity plans. They're getting clients declined. They're coming over to this, and the client goes, why are you giving me this home care product with prescription drug benefit? Here's why. We're going to get you a smaller hospital indemnity plan. I mean, that's not the purpose of it, but it's a rider. If you can get a hospital indemnity on its own, go do that. If you get declined for that, come over here and look at this product. Yeah, we can get you a smaller benefit, but it's still a hospital indemnity benefit. And then you also get this prescription drug on top, or you also get this home care on top. It's a very flexible plan. It's the best-selling plan that we have. And just to put it in perspective, I've got one agent that in the month of November wrote $160,000 in this product. That was his best month. That was by no means the only month that he wrote. He writes all year long. That was just his best month in 2018. So you saw the premiums earlier where, 75-year-olds were getting signed up for $70 a month, stuff like that. You can write that much of this product. You've got the clientele. He was going back of his old book of business. That's all he was doing. He wasn't sending out leads. He wasn't door knocking. He was just calling people up. One last product that I know you guys have, and this used to be our best-selling product, is Medico and their Recovery Care. Recovery Care is a name that a lot of these insurance companies use, but their Recovery Care product is an all-inclusive plan. It's 1 year wherever you're going to be. 1 year at home, 1 year in a facility. Their underwriting is middle of the road. It's not as tough as GTL's Recover Cash product. It's not as lenient as Aetna's Recovery Care. And it's a reimbursement. So that's the problem with this product. But it works really well if you want to stack coverage. If your client wants 2 or 3 or 4 years worth of coverage and we can't do it with long-term care, Medico is definitely the first option that I would be looking for to stack it on top of an Aetna Recovery Care. So just wanted you guys to keep it in mind. Cognitive exam, they don't have one of those. And I do have a lot of agents that still prefer this product because it is a easier sell. They can say, here's 1 year. And the client goes, where's one year where? And they go, anywhere. At home, in a facility, 1 year coverage. It's a simpler sell. You want to know what clients to ask. Those are the clients. Clients you already have in the Medicare sub. Clients have been declined. They can't afford it. Single women especially, because not all the single women have been saving up, and a lot of them know if something happens, I don't got a spouse to take care of me. I need some type of coverage before I fall back on my family. They don't want to be putting that burden on them. Ladies aren't like the guys, where the guys just say, I'm just going to go out behind the woodshed and I'll take care of this myself, not a problem. Ladies are more practical about that. They know that somebody in their family is going to try to take care of them. They want to try to take that burden off them. If they're 65, 70, 75, they might not be able to afford long-term care now, so they want to protect their family. Also, I mentioned that earlier, even if you have clients that do have great finances, got signed up with long-term care at the right time, go back to them. They've got elimination periods. Or maybe some of those old policies, they were sold without home care or before assisted living existed, because back in the day, that wasn't a thing. Some of those old policies will not pay for assisted living because it just simply wasn't a situation 20 years ago, 30 years ago. So going back, reviewing that portfolio with the clients you already have that you wrote, there's business to be had there. Or reviewing a portfolio that's incomplete with clients that couldn't sell them for whatever reason, there's business to be had there. And the clients don't know a lot of the time that they're at risk. They think they have, clients that have long-term care, they think they're covered for everything. Or the clients, a lot of them don't know long-term care exists. They think, the government's going to take care of me, or my health insurance will cover this. They just don't know. So with all that being said, I know I promised a 30-minute presentation. I am going a bit over, but I do still want to see if there are any questions, because I did fly through that. But the biggest thing is I want you guys to know about Aetna's Recovery Care and GTL's short-term home health care. And if you ever want more coverage than that, there are other products that you already have contracts with, and there are still more products out there. So I don't ever want you guys to say, I ran into this agent's got me. No, we can compete with that. So are there any questions for you guys right now that you can think of? Let me see here. I've got one that I see Remy typed in. Can you send me a copy of this presentation? Absolutely. Definitely send me an email. Remy, I can get that one out to you easy enough. But if there are any other agents that can see my email, definitely send me an email. I am recording this. I will get this sent out to you. Not an issue at all. If there are any of those agents out there want some product information, I can get that email out as well. Just let me know. I'm assuming South Carolina would be the state we'd be working in, but if not, let me know if you're working in a different state, if you have clients in a different state. And other than that, I guess any other questions that I can help out with? Mickey, are there any other thoughts that you have as we're get to the end?
Yeah, one. You had mentioned earlier those first two products, Aetna's and GTL. Those are true indemnity products, correct?
Correct. The only one that I showed here that was not indemnity was that last one with Medico. Otherwise, you are absolutely correct. The Aetna products and the GTL products, both of their plans, they are indemnity products.
And the other question I have, I mean, we're very familiar with long-term care. Kamala used to have one back in the day. Have sold hundreds of them. But if they meet either the 280 L's of cognitive impairment, trigger benefit, or a doctor, I think in that GTL one, that's right, medically necessary. Does then the indemnity benefit is paid out? Do they have to use a home health care agency in order to collect that money, or is the money just sent to them and they can hire whoever they want to?
It was hard to hear you there. Were you okay? Let me see if I heard you right. You were asking if they actually have to have somebody certified to provide that care once they trigger the benefit.
Correct. That's the answer. That's the question.
Yeah. They do have to have somebody certified in that type of care providing the benefit. And I say it like that. I don't want to say certified as, medically qualified, because plans like Aetna's Recovery Care, it will not only provide for, ADL care, so medical care, it will also provide for the instrumental activities of daily living. So cooking and cleaning around the house, when you put that home care rider on there, it'll provide for that as well. But it has to be somebody that's certified to be providing that care. So a non-medical home care agency, it has to be somebody that's certified for that that type of care. It does have to be somebody certified. They won't just pay out like some of those long-term cash benefits, which I've got an old MedAmerica plan. So one day all I'll have to do is have to say 280 L's or cognitive impairment, and they'll send me a check. That's not the way these plans work. You do actually have to get the care.
Okay. All right. Very good. And then one last thing I want to ask you to do. I've got you sent me the attachments before with the two products. And it looked like there was some brochures on the screen. Our agents, old school. I like to show pictures and show brochures. Pictures worth 1,000 words. So can we get some brochures on the Aetna product and the GTL product? That's what
I can definitely. I'll get an order sent out to you. Not a problem at all.
All right, maybe 24 brochures of each just to start with, because we need to kind of drill down on these products now to make sure we all understand them, and then it's going to be maybe 24 for each one of those products, and also I need a rate sheet, several rate sheets, maybe a dozen of those, and then also I'd like to have applications as well, maybe 24 applications, maybe 12 applications for each one.
Well, I tell you what, I can get the entire application packets sent out to you. Not only the brochures, but everything that they would need if they would want to sell. So that way, they can take a look at that and say, all right, this is what we need. And if they do, have a market for this, if they need more, by all means, we can get more application packets sent out. Not an issue at all.
Okay, very good. So you have an application package that you walk into the house with that's got everything basically in it.
Mm-hmm. Yep.
Okay.
Nice thing about Premier, we've got our supply department that they'll build they'll put that all together for you. So yeah, when you walk in, you'll have everything you need bundled real nice in that brochure, and it'll look smooth as ice.
All right. Well, maybe just send me a dozen then on each product. The Aetna and the GTL.
A dozen?
Yep.
Okay. I can do that.
All right. Very good.
All right. So, Remy, yeah, I need to get that email out to you with the presentation, and that way you can pass along to everyone else. Other than that, getting the supplies out. If there's anything else that Remy or Mickey that you can think of right now?
That's it. Thank you for your time. And then we literally have thousands of clients in that 65 to 75, whatever that age bracket. We've got a large book of institutions, so no reason why we can't sell these products.
Yep. And they have one example, and he's my golden boy now. But like I said, I've got the one agent that he works the Medicare market. He works the senior insurance market, and you know, he's to be frank, yes, he does have an established block of business, but the best month he had in 2018 was in November, and he wrote $160,000 in premium, and that was for the GTL product, and that's a lower premium than like the Aetna product. So it takes more to get that. But I mean, he was submitting business, you know, multiple apps per day because he was going back to his existing block. So if you guys have already got the clientele, you're already a step up from a lot of agents out there. So there's definitely money to be had. And I know money is what's going to grab everyone's attention to learn about these new products. So I do want to remind you guys that, yeah, you can turn the lights on by selling these products.
Okay.
But with that being said, once we got any other questions, I'll wrap this up. I'll get that email sent out, get that supply ordered, and of course, anybody has any questions, there's my email, there's my phone number. Feel free to give me a ring, send me an email. Any questions, any clients you want to hash out, I'm happy to help.
Okay, thank you, Rick.
Not a problem. You guys have a great day.
You too.